You've found the FarrCast, your weekly podcast with conversations from across Wall Street, Washington, and the world. And now here's your host, Michael Farr.
Welcome to the FarrCast. I am Michael Farr. Thanks so much for joining us again this week. It's the 24th day of October. We are getting through the first month here of the fourth quarter. And of course, no one cares about that at all. We're at the beginning of earnings season. People don't really care about that much either, do they? No, because we are a couple of weeks from the presidential election and a big congressional election and folks in the Senate. And this is big, local elections as well. So what's going on? Are we focused on the right things? And what's the state of the world? Well, the state of the world, ladies and gentlemen, of course, is very messy. And things in the United States are messy in the headlines, but the foundation is still okay. It's still okay, meaning the current economy is okay and growing. Unemployment is low. Inflation is coming down. The consumer remains relatively healthy. And the big problem, of course, that Farr's been talking about for the past several years is this exploding national debt and these huge national deficits. So we can't keep spending, but nobody wants to talk about that. We want to talk about impressive golfers and sports figures in the locker room. We want to talk about the former president being a fascist. We want to throw mud from all sides and confuse everybody, as long as we don't talk about any real issues. Let's just make sure we avoid those real issues. Let's not talk about Social Security or Medicare. Let's not talk about the tax rate. Let's not talk about international policy and the war in Ukraine and Israel and any of those things. We don't need to talk about those things at all. Okay, great. So, folks, here we are. And this election, I doubt, will be solved the Wednesday morning when we all wake up and after having cast our votes. I hope that you will please cast your vote. Please cast your vote. I'm going to go vote in Florida. I used to live in Maryland, and I used to say, my vote doesn't count in Maryland because Maryland's so overwhelmingly Democratic, it always votes Maryland. It always votes Democratic. And now I live in Florida, and Florida's overwhelmingly Republican, and it doesn't matter who I vote for because Florida's going to vote Republican. But that's okay. I have to look at myself every morning in the mirror for the next 4 years, and I want to know that at least I stood up and I said out loud the name of the person that I thought would be best in that office. The best of the two. Isn't that horrible? All you can do is choose the best of the two. How many elections in your life have you had to just look and say, okay, I'm holding my nose, but I'm going to vote for this one? I will tell you that's the majority of the elections in my life. All right. As we take a look at what's going on in markets, the interesting thing is that the 10-year yield has gone up over a half a point, over a 0.5%. That's big, 0.5%, when you're only talking about 4% levels, 3 3/4 to 4 1/4. That's a pretty big jump in yield on a percentage basis. And those yields have gone up after the Federal Reserve lowered rates and has promised to lower rates 2 more times. Jay Powell said he was going to do it. This is big. So markets continue this melt up. I think that's the path of least resistance. I was on CNBC this week and said that I didn't see any sort of imminent decline or bubble bursting in the markets. That isn't to say that markets aren't high. They are high. Markets are high. Prices are relatively full to the expensive side, but we're seeing a market broadening where the other 493 stocks, not those magnificent 7, are beginning to catch a bid. It feels healthier when the market gets a broad-based return. We don't see the over-leverage. We don't see the excessive speculation. Things look okay. So here we go. What are we going to do as investors coming into year end? We're going to look at our portfolios. We're going to make sure that we are adhering to our investment discipline, investment discipline. We're going to talk to our advisors, and we're going to stay the course because we're in this for the long term. Now, Kenny Polcari is in it for the long term, and we're going to see what he thinks about this election and what you should be doing with your portfolio. Does he see these excesses? And I want to ask him about one company that's getting pounded. Pounded. Kenny Polcari, we're so glad you're with us this morning from New York City. New York, New York. The city's so pretty, they named it twice. How are you?
I'm good. I'm good, and I'm standing to you out in front of the New York Stock Exchange, actually. Home for me for 40 years as I'm taking some clients there today to show them all about the capital markets. But I'm great. The weather's been really beautiful here in New York this week. I've been busy, but now it's time to spend a little time with you, Michael.
A little time with KP. Here we go. Kenny, I've looked at markets in my intro. I said we're still near all-time highs. We've got this political disruption. I think the most important thing going on is what the Fed is doing. And the Fed is going to have two more cuts, and it sounds like they're going to sit on their hands for quite a while. Nothing half as aggressive as Wall Street wants. How do you read the Fed tea leaves? Because I don't think, frankly, longer term, the political tea leaves matter, nor do a lot of the geopolitical tea leaves matter that much to markets over time. And disagree with that if you want to.
No, I don't at all. As a matter of fact, you and I talk about it all the time, is that the political and the geopolitical events, do have the ability to create short-term chaos. But
yes,
actually, that ends up being long-term opportunity, right, for the investors that can focus past it in some of those disruptions that we see that the political and the geopolitical events create.
Yes.
So no, I'm with you on that 100%. People should not be building portfolios around who they think is going to live in the White House or what they think is going to happen, in the Mideast, because while short term, and we are concerned that that peace comes to the world, but short term it creates some volatility and opportunity.
It certainly does. We've got now markets still near those all-time highs. We've got earnings season that seem to be coming in okay. We're seeing forecasts of revenue increases. Goldman Sachs says the market's only going to grow 3% over the next 10 years. I said hooey on CNBC earlier this week, and I said hooey because while Goldman's math can always make sense, you can always find an analyst to come up with the right math. You just can't find the analyst to come up with the right answer.
100%. 100%.
It's just too Malthusian to take every situation today and come up with a straight line forecast. Who would have thought of AI, for instance, 5 years ago and the difference that it would have made to returns? Who would have thought about the internet back in the 90s when you and I were trading AT&T? I mean, there are these things that happen over a decade that you can't predict, and to think that you're going to change your portfolio around because Goldman Sachs comes out with a 3% forecast. And even though they might be right, it just doesn't make sense to me. It's a 10-year forecast.
I'm not sure that they're even right. I put in my note yesterday that, Goldman must want to boost up their sales and trading revenue, because with a call like that, they're expecting all these big institutions to hit the sell button, and Goldman wants to be there on the other end, catching the commissions on all those trades.
Look, I understand mean reversion. I got it, and it makes sense. But and mean reversion doesn't stop and give you an average at the line. It doesn't stop at the mean.
Right.
The pendulum always swings both ways. But there's so many other factors that come in and consider. Anybody who wants to bet against U.S. corporate America and American business and ingenuity and creativity, you're out of your mind. You've lost your ass every time you've made that bet.
100%.
All right, Kenny. So we're coming into year end. People are nervous about the election. They're nervous about Kamala Harris. They're nervous about Donald Trump. They're nervous about all these things. I'm nervous too. I'm unhappy with all these. Every choice I've got, I'm not happy about. But what do you do with the portfolio? Some advice for Fred and Ethel here.
Listen, so you don't do much. And we said that at the very beginning. You're not going to change your portfolio drastically based on what you think the outcome is going to be on this election, right? You're not going to change. It depends on, who's living in the White House. It's not going to change your long-term focus. So to your point, now, this is what I've been telling clients completely, is that if you're nervous right now, then let's just keep the money that we have set for investment. We'll set it on the side, keep it in government money market funds until after we get through the election, until after we get a sense of what's going to happen, and then take advantage. But by no means am I telling anybody to change your portfolio. Now, look, you may once there's a clear definitive winner, you may want to take a little bit more weighting in, financial, say it's a Republican win. You may want to take a little bit more weighting in financials or maybe the small and mid caps or the defense stocks, right? That would be okay. Not that you're going to change your portfolio, but maybe you turn up the weighting a little bit to take advantage of the policies that may result in that kind of a presidency versus the other side. You may then decide to lighten up on different industries based on their policies. Technology, for instance, comes to mind in a Democratic win that, they're looking to break it up and add more regulation. The same with financials, add more regulation in the banking sector and, the investment management sector. Things like names like BlackRock or Owl under Democratic president might suffer a little bit more because of more regulation, while under Republican presidential win, they may actually benefit over the next 4 years. So, making tweaks like that is one thing after you find out, but changing your whole portfolio, absolutely not.
Absolutely not. Kenny, I want to drill down on a stock that's going to remain nameless. Okay, we're going to do this to make sure that I'm just not going to mention the name of this particular stock, but as an example, because sometimes you see stocks that really get beaten up, that certain companies have a very difficult time and still might have a decent balance sheet and a long history. Let's, for example, say, I don't know. Let's talk about an airplane manufacturer, and maybe they've had trouble with some of their airplanes misbehaving or, parts that don't work. And then there might be a union issue and strike, and all of a sudden the stock goes down and down and down. At what point, Kenny, even though this particular company, any particular company, because we're just talking about an example here, some random airline company, manufacturer, when it really gets beaten to hell with all sorts of problems and everything looks awful, do you step up and say, geez, I think that's probably enough pain. I think the world hates that stock. I know the world hates that stock. Maybe I'm going to buy some because I love to buy them when they hate them. I love to buy them when everybody hates them. What do you think?
I think that's a great story. I think that's a great way to look at it. And I would say to you, if we're talking about, just a company that might have suffered all those damages, look at it in the broader context. Who are the competitors? Are there any other U.S. competitors? Is it a duopoly? Is there only one other major manufacturer in that industry that exists in Europe? And so what does that mean for the U.S.? What does it mean for the government? What does it mean for the Defense Department in terms of what this company may provide, right? So I think you have to look at it. I think you have to look at who you are, right? Where you are in the life cycle and the risk scale, but certainly jumping in on a name like this that maybe is under some pressure, undue pressure. Some of it certainly maybe they deserve, but some of it might have been undone a little too much. And so there may be an opportunity there. But again, it really depends on who you are as the investor and where you are in the life cycle and how it fits into your portfolio. But it's never,
because I think about that. I mean, I could say when I was 30, all right, I'll take something which would have been, $5,000, which had been a lot of money to me when I was 30, and said, not so much now, but I'm going to take $5,000. I'm going to gamble and see if I can get it to double. See if I can get it to $7,500. Hell, I'll take a 50% bump. $2,500 would have been great. I'd have been thrilled. And roll the dice. And if I lost it, I lost it, but if you think about the real ultimate downside, you and I were talking before we came on air, and we were talking about General Motors. That's not any recommendation to buy or sell General Motors, but the government didn't let General Motors fail.
Correct.
If we only have one major manufacturer of airplanes in this country, do you think the government let it fail?
I would be hard pressed to understand how the government could let it fail, considering. Think about all the tentacles that a company like that would have in the country, in the economy. Think about aerospace and defense, the part they play in that. Think about just transportation in this country. Think about all the other parts of the economy that may be affected. So no, I would find it very difficult to think that the government would allow a company like that to fail, considering, they didn't allow General Motors to fail. So no, I would be in that camp. That there's a little bit of a safety net there and kind of a floor under it, in the sense that no, I don't think the government would let it fail.
Let me make one really clear point for our listeners. Neither Kenny nor I is recommending
Right.
that you do anything with any stock that even might resemble these descriptions. Okay,
Right.
don't worry about that. But there is a point when you see enough bad news out there as longtime investors that all of a sudden you say, all right, if this company's not going out of business, then it's going to stay in business and it isn't going to be at this level forever. And then is it worth the chance? But the thing I would really listen to, ladies and gentlemen, our listeners out there, and we love our FarrCast listeners. We really do. And we thank you so much for being FarrCast listeners now in season 8. We wouldn't be here in season 8 if it weren't for y'all. Here's the thing. When you see two old guys get really excited when it looks like a company's going out of business, when everything looks like hell, and they tell you to look at the company, that's the message. When everybody else hates it, when they're ready to throw it out in the trash, and you say, but wait, they still have a balance sheet. Don't they have a pretty good balance sheet?
Right.
And the government's not going to let General Motors go under, or they didn't. And you've got systemically important banks that the government's defined. The government's involved in some of these things. So maybe, but that's when you look, and that's when you have to be interested. Kenny, we're going to stay the course. We're going to pay close attention to this election, and we're going to keep talking to Kenny Polcari as we cover Wall Street, Washington, and the world. Thank you so much for being with us again this week on the FarrCast.
It's always a pleasure, Mike. Thanks for having me. And next time, let's do it at the New York Stock Exchange. That's always a very exciting place to have conversations like this.
Let's do it. You tell me when you're going to be there. I'll make it work, and we'll get Harry with all of his little, wonky toy stuff that we do to record this thing. We'll get him up there. All right. Kenny Polcari, thank you so much. Ladies and gentlemen, we're going to be back with Dan Mahaffee. Figure out what in the hell's going on with this election when we come back on the FarrCast. Please stay with us.
Thanks for being with us this week. Now it's time to go to our political analyst, Dan Mahaffee, and your host, Michael Farr.
Welcome back. Joining me now, as he does every week here on the FarrCast, except for the weeks when he doesn't, Dan Mahaffee, Vice Chairman of the Dr. Scholl Foundation, scholar at the Center for the Study of the Presidency and Congress, the senior political analyst on the FarrCast, now in season 8. Welcome back, Dan.
Good morning, Michael. Thank you. Great to be talking with you. It sounds like we can say my advice is 100% right the times it's right.
I think that's correct, Dan, and unimpeachable. And that's one of those words I can still say. Not everybody in this race can say that, but unimpeachable. We'll see what's going on in politics this week. But first, a quick apology. Folks, a quick apology. We had a listener, Tim Whalen, who sent me a note last week and said gently, did you know you were mispronouncing Vice President Harris's name? I hope you're not doing that on purpose. Well, no, Tim, I did not. And I do know that I have a bit of an accent, but I've gone back. I was unaware of it, and I appreciate very much you pointing it out to me. Kamala is Harris. Kamala Harris. Have I got it right, Dan?
Kamala.
Okay. Kamala. I apologize if anyone thought that I was taking a dig at the vice president. I assure you, I don't do that. When I take a dig, you'll know it. I don't mind taking digs at anybody I believe deserving of a dig, but no, that's not what I was doing. So appreciate very much. Thank you, Tim, for pointing it out. I know folks are rather.
And just as the one person involved in the show here who's known you for 40 years can confirm, if you're going to make a dig, you'll know it.
We hold our insults to a higher standard on the FarrCast.
Yes, we do. Well, yes. I know
that's one of the things you get from the University of the South education is
you should not. There should be no question in your mind that I've insulted you. I mean, I am that articulate. All right, Dan, tell us where we are with this election now in 2 weeks' time. 2 weeks' time, presidential election. Who gets elected president?
Look, I think you, at the risk of being a broken record, it's flip a coin right now. Each campaign is neck and neck. Each side is talking about what momentum they're seeing. Is it the Trump campaign saying they're seeing momentum in the polls? Is it the Harris campaign saying they're seeing momentum in early voting, and particularly around places like college campuses and cities where they believe they'll need to get the vote out? So, look, each side right now is neck and neck. You are going to be probably seeing even more and more disinformation from social media, things like that, the muck and mire being thrown around. So, sounding a bit like a teacher, but check your sources when you're looking at stuff, when you're seeing things, because
Does it matter, Dan? Does it matter? I mean,
well, look,
we've
the
seen
whether Twain actually
misinformation, and that's
said that
being nice.
the lie is halfway around the world before the truth gets its pants on,
Yes.
that that still stands true. But all in the end, right now, where we're at, and what I can only say is the only thing our listeners have really in their control, because I don't think we're going to hear much about policy in these next couple weeks, is you have the control to just get out there and vote. No
Get
matter
out there
which
and
way you
vote
think
makes a
this
lot of
is,
sense.
you get out there, you
Got to do
cast
it.
your ballot.
You got to do it. One way or the other. To not vote is to vote. You know the old line for procrastinators: if you're not making a decision, you just made a decision. So it makes a decision in and of itself. I listened to a debate that I'm hearing all over the place, Dan, and I'd love your thoughts. This notion of hey, business people, if you listen to everything out of Vice President Harris's and Governor Walz's sort of campaign about business, the banks, and the economy, these are not capitalist good for capitalism, good for free markets. They go against pretty much everything that business people stand for, and therefore you need to vote for Trump. And then I hear folks saying Trump lies all the time, and then I hear the Trump supporters say, actually, Harris lies too, and that we point out that both sides may be lying helps no one at all. And then I'll hear people say, okay, I can just never vote for Donald Trump. I don't like him. I don't respect him. I think he's a very bad person. So, and I think all of his rhetoric that he's going to exact some sort of retribution against political foes and others who criticize him scares me. All of these things are going back and forth. Dan, how do you sort through those particular arguments and make your decision as to which one you're going to vote for?
Mhm. I think it comes down to what are the candidates going to be in terms of the temperament, the leadership, and the character to hold the office. And I appreciate those who argue that with someone like former President Trump returning to office, you would have someone who is forceful, someone who can break through a lot of the bureaucracy, the swamp, the mire that has broken down what we see in government. That said, look, you also see the arguments of, is there the temperament? Is it the age that is the factor with the former president? Does he have the same type of people and advisors around him? Many of those advisors who once served with him now condemn him and say he should be nowhere near the office. On the other hand, with Harris, do you have questions, yes, about business policies, but also understanding how much of these policies can either president enact, given that Congress will likely be divided. The House looks likely to switch sides, although we don't know by how much. And at the end of the day, what will be the goal of the person in sitting in that office? What is their reason for seeking the presidency? And for Harris, we see, as she says, a call to public service. For the former president, for Trump, it seems to be much more to air his grievances as well as those of his supporters.
I wonder about that, Dan. If we take President Trump at his word, I'm going to lean back into you just a bit. If we take President Trump at his word, he thinks that there is an America that needs restoring. He thinks that there is an American greatness that only he can deliver. So he does start with this sort of vision and values. Better when he sticks to a script than when he starts to go off where at times it's difficult to follow him. But he does have that vision, and yes, it does seem that most conversations um, come back to him and various grievances. But
And look, I understand and appreciate. I've heard versions of an argument too that say that when you look at Biden and Harris, you feel this version of American decline. And what with Trump, as you say, he has this image of restoration, but then you boil down what are his policies? How would he act with trade, with engagements with dictators around the world that we see on the march? And some folks even say, look, I get, roll the dice 10 times and maybe three times Trump provokes World War III, but only he can break out of the malaise that this country is in. And I appreciate that frustration, but you think of the damage that can be wrought by what is one of the most powerful offices in the world. So I caution that argument when you think that to consider what power the presidency has over an immense military, relations with a dangerous world, and in some instances, particularly on trade, an area where he can act or she could act unencumbered by Congress, particularly with tariffs.
I watched Leland Vittert on News Nation last night, who took a large part of Trump's speech live. Large part of Trump's speech live last night. In it, President Trump was saying that he admired Xi Jinping, and he knew he would be criticized for saying that Xi Jinping was brilliant and was strong and a strong leader, and he admired that, and that Xi Jinping controlled a country of 1.3 billion people and did a great job of keeping them all in line. He admired and understood Vladimir Putin, that he was a very strong, also very intelligent person. I'm not allowed to compliment these people, he says, because there are enemies. But these are people we have to work with, and that I do understand them, and I can have relationships with them. The implication was because he's a strong person as well, not intimidated by these people. And then Leland went on to say this was Trump at his best, that he was staying on script, that he was genuine, that he was funny, he was being humorous, and if he could keep that up, he'd certainly had an easier path to the White House. He was in North Carolina, President Trump, last night, and he was spending a lot of time telling them how he liked the furniture and the furniture business that was stolen from them, removed from them. He said that he had a heart for furniture. That's a direct quotation. I'm not sure what a heart for furniture meant, but Vittert said that this was great stuff, Dan. So this appeals. President Trump is finding a place in the hearts of a lot of American voters, and so is Kamala Harris.
Yeah.
So
look, I think the point you raised though that about Trump and the rallies, I think it leads to a segue of another thought I would say, and I think this is analysis at least as we go forward, is at some point in November, there's going to be a campaign regretting decisions they've made because they lost. And for Trump, it will be those rallies. Can he stay on message? Can they be positive? Can they be energetic? Can they talk about a reinvigorating message? That is working in those states where he's doing it. If he goes off script, if he goes into the eating the pets, the deportations, the insults, or some of the times where either he or the technology malfunctions and you see him ambling about for quite some time. Look, those are the things where if those rallies go wrong, they'll be regretting that in some of those swing states if voters break against him. In the Harris side, they'll be regretting if they didn't put out policy plans in time, if they're being critiqued over how they just failed to go beyond denouncing Trump but not putting forward a plan of their own. And then finally, I think the vice presidential picks will come under scrutiny. Walz, certainly, you see some of his stuff. I get the Midwestern self-depreciation, but self-deprecation, but being a knucklehead stuff doesn't really sense that you're going to be the right one to take the reins if something happened. As well as if it comes down to Pennsylvania, why didn't you pick Shapiro? On the other hand, if you see that women in the suburbs really broke against the Republicans in historic numbers, then the Vance pick and all the culture war baggage that brought will be blamed as well.
I'm going to just take the other side of your coin flipping and suggest that Donald Trump wins this election on the Electoral College vote, and that Kamala Harris wins the popular vote, and that's the way it'll break out. And I think it could easily take until December till we actually have a very clear decision as to president. It could happen sooner, but it does seem like it could be rather messy. We're going to be here to talk to you through it the whole time. Dan, if we have this divided House, divided Senate, we have a peaceful transition of power, certainly as President Biden leaves office. The next 4 years, you think, no matter the dire predictions and expectations, that the Republic survives?
I think it does. I think because the institutions are there. I know it is something where you say that institutions have failed in the past, but I think the American people, no matter the outcome of elections, have risen to the challenge continuously. We've had moments of division in our past and risen to them before. I think if we can avoid violence and the cycle that falls into, that's the key challenge of coming out of this. If we can continue to believe that our democratic voice, small d democratic voice, is heard, then the Republic will endure.
Dan Mahaffee is vice chairman of the Dr. Scholl Foundation, a scholar for the Center for the Study of the Presidency and Congress at Washington, D.C., think tank, senior political analyst on the FarrCast in Season 8. Thank you, Dan. We're going to be right back with Dr. Jay Bryson, chief economist for Wells Fargo, when we come back on the FarrCast. Please stay with us.
Michael Farr and the FarrCast are proud to support Heroes, Inc. Heroes supports the spouses and children of law enforcement officers and firefighters who gave their lives in the line of duty to the greater Washington, D.C. community. Their singular goal is to honor the supreme sacrifice made by these individuals by caring for their families. Heroes' work begins within 24 hours of the tragic loss and continues indefinitely. We invite you to learn more about Heroes' mission at heroes.org. We hope that you will consider supporting Heroes as they endeavor to honor those who protect us. That's heroes.org. Heroes, here for you, here for good. And now, back to the FarrCast and your host, Michael Farr. We hope you're enjoying this week's edition of the FarrCast. Please share us with friends and colleagues. And now, back to your host, Michael Farr.
Welcome back. Fascinating with Mahaffee. Terrific segment with Kenny Polcari. And now, ladies and gentlemen, the event of the day, of the month, of the year, the guy you've been waiting for, once again, Dr. Jay Bryson, a PhD economist, chief economist at Wells Fargo, had worked at the Federal Reserve as an analyst economist, and one of the smartest, nicest guys we get to talk to. Welcome back to the FarrCast, Jay.
Well, thank you, Michael. Always a pleasure to be on.
We are so glad you're here. Jay, is the economy okay or not?
the economy is fine right now. It's interesting. I was in New York.
Americans hate the economy. They say it's awful. They're worried about everything's going wrong, and it's a big problem with this election. And you say it's fine. I say it's fine. Nobody believes us.
So I was in a panel in New York the other day, and one of the panelists there, we're talking about the economy, and he said he thought it was the best economy he's ever seen. And I said, really? I said, even in the late 1990s. And he said, yes, as good as that right now. What's the disconnect? I mean, I think the disconnect is we did have an inflation problem. Right. And so people, we no longer really have much of an inflation problem right now. People remember what the price of eggs were, or the gallon of milk was, or whatever, right? 3 or 4 years ago. And they say 3 or 4 years ago, I paid X for that. Now I'm paying 60% more. When's it going to go back to X? And the answer is, well, guess what? It's not going to go back to X. But it's not going to go up another 60% from here. It takes them a few years to really get adjusted to the higher level of prices. But those prices aren't going up as much anymore as they were just a few years ago. So I think that's the kind of disconnect we have here.
This will come as no shock for as long as you've known me. But I think the problem is sales, because I think most anything can be solved with sales. Sales make the world go round. Why in the hell can't somebody in this administration come out and say, hey, do you remember what your check was? I know you remember what the price of eggs happened to be, but do you remember what your paycheck was 3 years ago? Your paycheck was a lot lower. Look what you're making now. Look what these union raises have gotten across the country. Boeing just turned down a 35% potential pay increase, and they're holding out for more. These wages are going up. Americans are making more than they had. And, have they really improved quality of life on the bottom line, dollar for dollar adjusted for inflation? Not so much. But there's not the misery index and the unaffordable can't survive index. That hasn't really changed a whole lot either. So we're at least treading water, I think, for the average American. I feel like I'd fire everybody on the economic team for the Biden administration, because they've got a really good story, and none of these people have sold it. What am I missing?
Well, I don't think you're missing much there, Michael. I mean, in terms of, obviously I can't speak for the administration, but
go ahead, Jay. Speak for the administration. Somebody ought to speak for the damned administration. God.
But real income is higher than it was back before the pandemic. It was interesting. We just recently got some data about a month ago or so. We got some revised data that showed that income was higher than originally expected. The savings rate, which looked abysmally low, was actually revised up to, it's not as high as what it was during the last decade, but it was revised up significantly higher. And so the point here is that, yes, I mean, the data show that the financial position of the household sector writ large is actually pretty good. Now, does that mean everybody is better than they were before the pandemic? Of course not. Particularly people at the lower income levels have been stressed. We do see, credit card delinquencies going up. We see delinquencies on auto loans going up. But in general, when you step back and you look at the aggregate position of the household sector in the United States today, it's actually doing quite well.
Yeah, and if the average is doing well and we look forward, I've said that the most important thing going on is that the Fed has taken its foot off the brakes, not really changed policy, not adding accommodation, not adding stimulus, but the Fed is seemingly content with the direction of inflation. Certainly, the level of inflation, they still seem to be playing a wait and see game as to the actual level of inflation, if it's coming back to where they want it. Do you agree with that? If you were on the Fed right now, and by the way, President-elect, whomever you are, if you happen to be listening to the FarrCast, and I can't imagine they wouldn't, I would expect.
I can't imagine they wouldn't be either.
Really, I mean, President Trump, Vice President Harris, we've loved having you as listeners, and we hope this is helpful to you. It's why we have Dr. Jay Bryson on. If you were on the Fed, and I think he probably should be, folks, he should be, so just keep that one in mind, Dr. Jay Bryson for the Federal Reserve. What would you be voting for more cuts at the next meeting? Would you go for a quarter point, as Jay Powell has suggested before year end? Are they doing the right thing?
So at this point, knowing what I know right now, and you got to say that, right? Because the Fed is not going to meet until November the 7th, right? The world can change between now and then. But knowing what I know right now, I think a quarter point on November is probably warranted, right? So why do I say that? All right, it gets back to the stance of monetary policy, okay? And the way we measure that is through what's called the real Fed funds rate, okay? So if you look at the target range right now, it's 475 to 5. What really matters for the real economy at the end of the day is not that nominal rate. It's the real rate. It's that nominal rate less inflation. Okay. Right. And so before they cut rates by 50 basis points, that rate was closing in on, in real terms, 3%. So the last time we were there was in 2007. And, it's been 17 years. Point here is monetary policy is probably restrictive. So where does it need to be? For neutral. So it's neither, you talked about stimulating the economy. It's neither stimulating the economy nor restraining the economy. That's what we call neutral. Where is that? Well, nobody really knows for sure, but you try to estimate these things. But most people's best guess would be, let's call it 1% to 1.5%. Right now we're still north of 2. We're roughly 2.5%. So in some sense, the Fed is 100 basis points too restrictive right now. And monetary policy works with a lag. And so I think there's room to bring it down, but to bring it down slowly and, see where we are. That 50 basis point rate cut that we got back in September, that's kind of a down payment on the easing. And, they wanted to start moving more into a more neutral sort of stance. They've done that. And what we need to be doing right now is just keeping an eye on what's going on with the data out there and, kind of reacting to that. I think at this point, 25 basis points in November. We'll see how the economy goes after that.
You think the Fed is doing what the Fed should be doing?
Yes. In a word, yes.
In a word, yes. Okay. As we look forward into 2025 and perhaps 2026, we're hearing folks, particularly on Wall Street and in the financial media, and I find it somewhat shocking that everybody is suddenly shocked that the national debt is over $36 trillion. I mean, shocking. Gambling in Casablanca? Shocking. Really? You are, what in the holy hell have you been paying attention to? We just had a $1.8 trillion deficit for the last fiscal year. When does this get to be a problem for the U.S. and the amount of debt service and everything else now larger than the spending on defense? I mean, those sort of things bother old guys like me. Don't apparently bother guys like you, even though we're the same age, but you're a lot smarter. So tell me if I should be bothered, why I shouldn't be bothered, and how long can this deficit, if you're not bothered, how long can this deficit spending go on and on and on?
So I don't think we are looking in the United States at a Liz Truss moment. What I mean by that is, some of you probably know, the former prime minister of the United Kingdom, when she came in, whenever it was, a year and a half ago or something like that, she had this plan to cut taxes, and there really wasn't any credible way to make it up in terms of spending cuts, and the British bond market melted down. I don't think we're looking at that in the United States. There's alternative to.
But the great part there was that she was prime minister for about 25 minutes, I think, maybe 26 minutes.
Yeah, roughly that. Yeah.
I mean, the best part of her prime ministership, if that's what they call it over there, was that she actually got to go meet the Queen in the last days of days.
Well, she got to meet her twice, right? She's, when she accepted her prime ministership and then when she resigned, so anyway.
Wasn't that the same afternoon? I don't know. Does that count for two meetings? Okay.
Maybe it was one continuous meeting. I don't know. But in any case, so I don't think we're looking at a Liz Truss moment anytime soon, because there's alternative to British government bonds. There's no alternative to U.S. Treasury securities. The market for U.S. Treasury securities is the deepest, most liquid, most transparent financial market in the world. It serves as collateral for trillions and trillions and trillions of dollars of other financial obligations. That said, What it does do as the interest on the national debt goes up, it starts to squeeze your options elsewhere, right? So in order as that spending goes up, you have to cut back somewhere else. You have to cut back maybe on defense. At the end of the day, the big things in the budget are Social Security, Medicare, Medicaid, the entitlements, defense, and the interest on the national debt. All this other sort of stuff, you can take it down to zero, and quite frankly, it really doesn't matter. It doesn't move the needle. So if the interest on the national debt continues to rise, what you have to do then is you either have to squeeze Social Security, Medicare, and Medicaid, and everyone's saying that's off the table. You've got to cut national defense. Really? In today's geopolitical environment? Are you going to do that? Maybe you can default on the debt, but that's probably a really dumb idea. Or you have to raise taxes, right? And so it squeezes the options that the government can do over time. And frankly, Michael, what I worry about is when I look at history is democracies don't make painful decisions until they're forced to do it. And I'm not saying we're going to have a Liz Truss moment anytime soon, but suddenly if interest rates back up really suddenly, maybe the squeeze comes because nobody can afford a house now because mortgage rates are based off of the 10-year Treasury security. And maybe that's where we get the political come to Jesus moment, if you will, about we've got to do something about this.
Historically, though, Jay, and I say this with a lot of temerity, most societies, economies, have monetized this kind of debt. They just the other option is to inflate it away and let it go, debase the value of the currency, and thereby reduce the significance of that existing debt. In given all the other options of taxes or growth or everything else, the debts of such a size right now, are they even options? Is there a real option other than inflating our way out of this?
Yeah, so the real options is, so if you ask me, how do you cut the deficit?
Yes.
I will answer as an economist. As an economist, it's really easy. The deficit is the difference between revenues and spending. Yep. Okay, so if you want to reduce the deficit, you've got to raise revenues and or cut spending. All right, now that's a political decision how you do that. So that's how you do it. The other way is you could potentially grow your way out of it. And what we need, and if AI becomes a productivity game changer, and I think the jury is still out on that. AI is still in its infancy. But that's the way you can raise the long-term growth rate of the U.S. economy. That, or, this may be political taboo, you got to have more immigration. You got to have more people producing goods and services. That's the answer. That's how you raise your long-term growth rate of the U.S. economy. It's either through productivity changes, and AI potentially is that, and or you have more people working, and we could start having more babies tomorrow. That's not going to help us for another 20 years, no. Right? I mean, unless you dramatically change the child labor laws in this country. So the answer is, right, you got to have more immigration. We need to have an adult conversation about immigration.
Jay Bryson, we always learn so much. Final question, and I've got 20 seconds. Jeff Lacker doesn't see any real signs of a recession coming at this point. Do you, and are you reasonably constructive for economic growth over 2025 and 2026?
I am reasonably constructive knowing what I know right now. Yes, the U.S. economy, the underlying fundamentals of the U.S. economy look pretty good. Where I may change my tune on that is if we were to get into a trade war in the next year or two. You get into a trade war, that changes that calculus.
You can always find that one thing that'll change everything, and we hope we don't see it. But we hope we see a lot more of you, Dr. Bryson, over the balance of this year and in 2025 and 2026. Dr. Jay Bryson, Chief Economist at Wells Fargo, and my great friend and one of my smartest friends. I've got three really smart friends. Jay's one of them. That's it for another FarrCast. Ladies and gentlemen, as we cover Wall Street, Washington, and the world, we'll be back again next week. Do it all again, bringing you experts and insiders from around the country and around the world so that we can better understand what's going on in the country, the economy, in Washington, and on Wall Street, how it's all going to affect your investing profile and your economic personal outlook. We hope it's helpful. For Harry Jennings, our producer, everybody at Hightower Advisors and Farr Miller in Washington, thank you for listening. Thank you for sharing us on social media. Thanks for your comments and notes. We'll be back again next week. From Rehoboth Beach, Delaware, I'm Michael Farr.
Farr Miller in Washington is a group comprised of investment professionals registered with Hightower Advisors, LLC, and SEC-registered investment advisor. Some investment professionals may also be registered with Hightower Securities, LLC, member FINRA and SIPC. Advisory services are offered through Hightower Advisors, LLC. Securities are offered through Hightower Securities, LLC. All information referenced herein is from sources believed to be reliable. Farr Miller in Washington and Hightower Advisors, LLC have not independently verified the accuracy or completeness of the information contained in this podcast. Farr Miller in Washington and Hightower Advisors, LLC, and any of its affiliates make no representations or warranties, expressed or implied, as to the accuracy or completeness of the information or for statements or errors or omissions or results obtained from the use of this information. Farr Miller in Washington and Hightower Advisors, LLC, and any of its affiliates assume no liability for any action made or taken in reliance on or relating in any way to the information. This podcast and the materials contained herein were created for informational purposes only. The opinions expressed are solely those of the authors and do not represent those of Hightower Advisors, LLC, or any of its affiliates. Farr Miller in Washington and Hightower Advisors, LLC, or any of its affiliates do not provide tax or legal advice. This material was not intended or written to be used or presented in any way to any entity as tax or legal advice. Clients are urged to consult their tax and or legal advisors for related questions.